Amazing. Hey everyone, my name is Parth. I'm a partner at Bain Capital Crypto, and I have the distinct pleasure to introduce Reid. Reid is a company we've partnered with, and we've known Reid for a very long time. And Reid's going to talk to us about his newest company, Ground, today. But maybe before getting started, I am going to take a few seconds and talk a little about Reid's history. And so, Reid's background is a good encapsulation of where I think crypto is today. So he has a foot in two different worlds in like a very distinct way. So Reid started his career in a lot of traditional fintech. So he worked at companies like Square, he worked at Stripe, Chime, and so I think got a very good understanding of the landscape of how you build financial products. And then Reid went on to start two very iconic crypto companies. So one is Compound, and his most recent one was Superstate. And so I think in that experience, he got to take a lot of the financial learnings of building traditional fintech for a decade plus, and then also build very iconic crypto companies. And now he's going to do it again with Ground. And so, Reid, keep me honest that was a good articulation of a little bit of your story, but we'd love to just hear it directly from you. Can you tell us a little about how you got to where Ground is today, and the story of Ground right now?
Yeah, that was a great encapsulation of the arc. I think maybe kind of starting like why did I go into fintech? I was attracted to the problem space. I kind of experienced some of the problems that Square, Stripe was solving, as well as Chime. Trying to get a terminal from B of A at one point, like 20 years ago, trying to actually create an e-commerce site pre-Stripe or kind of right around Stripe's emergence, and then dealing with like overdraft fees. I think I'd seen kind of like every kind of problem that these companies are trying to solve, and it really resonated with me on how they were solving them, the elegance behind the solution, the simplicity of it, and that really then kind of got further magnified by what I was seeing in the blockchain space, particularly from stablecoins and decentralized finance. Just the ability to build far more flexible and accommodating types of products in banking and finance that were just not really capable of being built in the traditional world, which is why I got really excited about joining the Compound Labs team and then ultimately co-founding Superstate, kind of merging the worlds together through a bridge to put TradFi on the blockchain. That's very much the arc and very much kind of the reason for my joining fintechs, but then really pushing into the blockchain space.
Very cool. And then can you talk about Ground today?
Yes, of course. So Ground today is really kind of the capstone of kind of this arc of really the recognition of the power of the blockchain itself and the superpowers of crypto. The missing piece to all of this is really the ability for pretty much any financial application, banking app, or platform or service to be able to embed, to integrate the technologies, the functionality on the blockchain into their existing products or new products they'd like to build. So a neobank or a financial application of some kind wanting to include elements of decentralized finance like yield or leverage or borrow lending, really being able to do that very easily and simply. But today, that just requires a lot of work to be able to integrate the various components, to be able to then maneuver and orchestrate across a variety of integrations, normalizing the data, automating system, just a lot of work. We haven't even talked about how do you do that in a compliant fashion or secure fashion. There's not a great interface for this today that unifies the access and really compresses all of that needed functionality into a single endpoint for a large regulated client to be able to use. So that's what we're solving at Ground, really the ability to embed and interact with a variety of on-chain functions easily and seamlessly so that traditional markets, regulated markets like neobanks that kind of emerged prior to the blockchain really coming to the fore and others can actually embed these functions into their product lines.
That's awesome. So I imagine a lot of our audience has heard of stablecoins. And so my mental model has always been that stablecoins, you have payments, you have dollar-based accounts, and now people are like, what do we do with them? But how would you go about describing the shift of what stablecoins are becoming? they're going from balance sheet to this like platform economic story. So can you describe the shift and what you've seen and how that relates to what you're doing now?
Very much so. Stablecoins is kind of a fascinating evolution or adoption pattern, where there's been quite a lot of interest in it outside of the United States and in the US. Outside the US, there's been a really tracking of dollarization, of cross-border money movement, of payment flows, and we're seeing that really hit within the United States as well. Just an ability to build faster, more intuitive products on top of stablecoin rails that's really starting to kind of come to the fore for banks who are looking at stablecoins as, okay, is this another asset we should hold on the balance sheet? How do we accommodate that? How do we build products around it for clients that are really transacting in stablecoins and want to maintain their operations, their balance sheet, their payroll systems in stablecoins? And so we've seen this evolution of stablecoins being a store of value to a payment rail to now just a really strong operational tool. And we're seeing products being built on top of them, banking services, financial services of different kinds. We now have really spending accounts for stablecoins. But now there's really this evolution of, okay, how do we make these things more productive, more useful when they're maybe idling in an account or in a float, and they're really just sitting on a balance sheet, not really doing anything, but they have a ton of potential. Ground's focus is really to kind of unlock that kinetic energy, to make it possible for a neobank or an end user of an account on a neo app to be able to activate those assets and to make them more useful, more engaged with the wider ecosystem than they would be otherwise, just kind of basically, sitting under a digital mattress. If you're just holding stable coins in a wallet, it doesn't do anything. It's this equivalent of keeping dollars in a mattress. We think that is not necessarily the direction things are going to go or should go. Ground, we're really building toward being able to empower and really activate all of those balances wherever they may be. Uh, Whether that's in a neo finance app on an exchange, it's more geared toward a Web3 audience, or the kind of growing adoption in more traditional neobanks in the US and abroad that are allowing clients to hold balances denominated in stablecoins. They need the ability to be able to do something with those assets, and Ground we think is going to be a great solution for them.
Yeah. And we chatted about this before, which is that, especially that last point, that the fintechs and neobanks are starting to recognize that stablecoins are a strategic asset in their balance sheet, right? Or for their customers in some way. So why do you think that's happening now? And like in the conversations you're having with customers, hearing what are they getting excited by?
It's really, I think, just the evolution of the adoptive curve of kind of there's this critical mass now of, wow, we have
Hmm.
all this latent value. What do we do with this latent value? We should make this more exciting, more dynamic, more useful for ourselves or our clients. And so that's the conversation that we've been having, where there's this real excitement and interest from our client base to be able to really create new products or even highly personalized products that stablecoins really allow for. And Ground, built on top of this or integrated with this, really accommodates that need, that ability to create personalized products, to seek out risk-adjusted yields, to build something personalized for a wider user base or for like an individual client itself. So that's really what we're seeing is really stablecoins have just reached this critical mass of now we have to do something with it. Like it's great. It solved these amazing problems of faster money movement, a faster reconciliation, instantaneous settlement. But it's like, okay, now that we have accumulated all of this great value, what more do we do with it? We can't just store it in a mattress. We need to actually turn it on. And that's what we're really seeing kind of come more and more into the conversation.
Yeah. And then how do you guide your customers, potential customers, platform fintechs to think about this? So I'm sure a lot of them are like, hey, we have like these balances, let's generate yield. And I'm sure they have questions around, and there's probably some in the audience as well around, is that a revenue generator? Do we give it all to users? Is that retention? What are some of the advice you give to fintechs as they think about how to monetize this latent demand?
Yeah. The market is very much kind of experimenting. Like, you know, each client, each design partner is really evaluating what is right for them and what is right for their users and what are their competitors doing. So there's a lot of experimentation on exactly this. Now that there is this critical mass where there is meaningful value to be generated using blockchain functions to enhance the utility of stablecoins. It's okay. Now, what do we do with this? Do we give it to our users? Do we keep it for ourselves? Do we create interesting products around this or incentive programs around this? And pretty much all the conversations have started with some perspective on like what a client wants to do or what they're trying to accomplish. And it really starts to kind of materialize pretty quickly that they don't want to just do one thing. They want to start in one area, but then use the superpowers of crypto, the functionality that Ground brings for them to do a variety of things to experiment. So like, okay, well, we have this one product that is holding stablecoins for our clients. We'd like to make this more useful, more compelling for them. So we'll integrate Ground accordingly. And then they realize like, okay, maybe we can do some other things on this side of the business or on this side of the
Mm,
product where we can really kind of do something a bit more, um, whether it's for crypto native assets or it's different types of functions. Or it's really about a different type of user that they want to bring on board. I think that's what we're really seeing is this
mm,
maturation of the space generally, where there might be an initial use case, just of those we
mm,
talked about. Let's create a new product. Let's activate an idle balance. Let's monetize it. But there's really this maturation towards, well, we can do one of those things, or we can do maybe start with one, add to that, or even really, ramp up the product line to where we start with a particular user base that we think this will be compelling for, but we can build other products to attract other
mm,
types of users. So there's really this kind of burgeoning experimentation and exploration of what is possible as a lot of modern neobanks, those that have kind of formed in recent memory to those that have kind of already established themselves, really pick up uh, the um, the available opportunities and are starting to evaluate. Okay, how do we make this work for ourselves? What needs to be true? What needs to be probed? And I think it's been a really really exciting conversation with them because there really is kind of this kind of unbridling of let's build some unique products. Let's do something new and compelling for ourselves or our clients. And that's been really fun to have those conversations with our client base.
that's awesome. Yeah, yeah, we're hearing similar things as well. Like some folks want to use the yield to acquire users, right? Other people are like, if we don't do this, like our users going to leave. Let's keep them keep spend and like accounts in the product itself. Other ones view it as monetization, and they're like, hey, actually, this idle yield, our customers don't actually care, and so that could be like a revenue line for us as a business, and then we can funnel it back into R&D. And so, I agree. It's actually very dynamic a space, and it's very interesting on which customer chooses to enter at which point, essentially.
Very, very.
Yeah.
There's been this kind of semi-nichification of some degree of like really fintechs really kind of finding their particular reason, their particular problem or user base. But then it's also kind of forcing this high level of experimentation and this recognition of, wow, it's very easy for our clients to switch. We need to just constantly iterate and seek out a better opportunity for them to really make it so that they do not easily or do not switch from us to someone else. And I think that's what's really great about the whole space. It just engenders this high level of experimentation and competition that Ground is going to help power.
Yeah, and the ultimate winner is just the customer, right? They get so many different options. Do you have any fun examples? Like, who do you think is doing it creatively now? Like, any good tactical examples that comes to mind?
On the client side, you mean?
Yeah, on the client side.
Yeah, there's some really, I mean, I would say this, it's still a little early, but there's been a lot of really fun kind of explorations. We have, obviously, I think there's this kind of, very clear signal in the sky from Coinbase.
Mm.
who found a way to integrate a DeFi protocol Morpho into their experience, where instead of it requiring their clients, their end users, to have to navigate an array of integrations and seed phrases and private keys, it's a single button click that immediately grants them the access to be able to lend their stablecoins and earn more yield. I think that that is really, really exciting. And that's really kind of promoting a lot more experimentation of, okay, what else can we do? What else needs to be done? How do we really make this compelling so that we're not just building just the same thing as the competitor, but we're building something that's increasingly personalized for our user base or for our own use cases, own purposes rather. So we're really starting to see this ev evolution of, okay, here's kind of a single answer for this problem, or here's a single way to make this product better. But it's really kind of expanding into, how do we make this more dynamic? How do we make this more compelling? How do we make this same concept more exciting for our clients? Whether that's, granting access to a variety of different options, or really seeking out a particular outcome for our end users, or really just trying to create something that's very, very unique, and is somehow more tailored to the end use case or the end client.
Mm.
And so
Yeah.
it's very much in that sort of evolutionary phase, but I think it's increasingly been proven, and now it's really about the experimentation and really seeking out, okay, this is really how it's going to work really well.
Yeah. And how has the ergonomics evolved to actually access this? I think one thing that you've seen in crypto is just like a lot of it is masking it. You want to mask some of the complexity. But at the same time, like security is really important here, right? And trust, and how do you build that with the customer really matters. And so yeah, how do you think about that? Like what's the right
Yeah.
abstraction to show? What do you want to expose? What do you not want to expose? Like how do you think about those design decisions?
I think this is a really good question. And there's another great example out there, like the Nook app or the Fido app. These are both kind of neobanks or neo finance apps that have worked hard to initially create an experience that grants their clients, their end users, access to kind of a preset set of options from the blockchain to enhance the utility of their balances. And they provide a lot of degrees of movement, of optionality for their users to really choose from. I think there's kind of a range that's going to be available here that Ground is really pushing into, where our clients generally find that it's relatively straightforward to do one integration to really enhance a particular balance or improve a particular product, but you realize pretty quickly that you need more than one. That one will over time change, or it will become less compelling because a competitor's using it, or there'll be some alteration in the ecosystem where there's a better option. Ground provides an API that is easily configurable so that our clients are able to uh, effectively provide a similar experience of hit a button, get an enhanced balance, get yield, get leverage, but you don't have to actually navigate and maneuver across the pantheon of options. It can be fully abstracted away from the client that is integrating it, as well as abstracted away from the end user that is really actually interacting with it. But there's a range within that to where there can be a level of um, uh, exploration provided to the end user so that they can effectively make decisions for themselves. So we think that there's not going to be necessarily like a one size fits all. What we've really built our platform towards is accommodating the range of expectations on what degree and who is going to configure their product for themselves, and what are they really seeking out. Ultimately, though, this all boils down to having a unifying experience, an experience and interface that really makes it easy for our clients, the integrating platform or application, and their end users or their employees to be able to very easily understand what the options are, to understand what the parameters of those options are when they're trying to build a product or build
Mm.
an experience or enhance a balance or a product, and be able to easily pick what they think is most appropriate for them, but then also adjust those choices in the future, kind of at will. We think ultimately there needs to just be a really, really simple unifying experience that makes it easy for our clients to be able to navigate the array of options, to pick ones that are relevant for them, and then to adjust those easily in the future as well, without having to, again, perform a variety of integrations, move assets across the different blockchains, the different venues or protocols, but really actually have this all captured into a single API that is highly configurable, but also very flexible to accommodate changing patterns, changing expectations from either our clients or their users.
Reid, you're telling me people don't want to deal with multiple blockchains and all these integrations. This is crazy to hear. But it's also
Yes,
funny because like going back to what we were talking about earlier, companies are still figuring out how to use it, right? And so they're deciding what purpose they want, which source of yield they want to integrate to. And so giving them that flexibility is really important, right? Because they may try one thing one quarter and then they may try something else the next quarter, right? Or they may add things on, as you said, they end up layering different products on.
very much so. Very much so. I think there's going to be this increasing maturation and sophistication in the market of really being able to assess and understand what is important for them and what the outcome is for a client or for a user base, and accommodating that degree of experimentation through our API is what makes our platform so powerful. To where there can be this seeking out of what the right combination of different components are on the blockchain. I think that's really, really just the most powerful tool that we can provide today. Ultimately, I think there will be an increasing desire to really offload more, not just integrations, but also the decision making, the discretion around what is best for our clients or what is best for their end users. And I think that's just going to come with time as there's going to be this increasing desire not only to just move away from having to integrate everything, but also move away from from the ability to have to make all the decisions. Um, and I
Mm,
think we're really going to see that start to pick up as well.
very cool. And so how do you advise platforms to think about risk management? Um, you hear about hacks, you hear about changing yields. There's so much complexity under the hood there. And so what advice do you give to like platforms and how do you walk them through thinking through risk management or which yield sources to integrate to, how to do it in a secure way?
Yes, really, really good question. So we start generally from like the technology layer. We've built our platform to be very secure, very safe, very reliable, and we built it in a way that not only provides that and high levels of configurability, but quite a lot of systems automations and alerting, so that our clients can very rapidly make changes to their integration or to their preset choices and allocations of what venues to use for what use case, whether that's earning yield, using leverage, what have you. But when we really think about, okay, which ones of these should we use? It really is kind of a discussion with our clients on what are the outcomes they're really, striving for. Some are very, low on the risk curve, where they're really just looking for something close to the federal funds rate or SOFR. And that's really kind of all they want. But they really want the superpowers of crypto. They want instantaneous settlement. They want 24/7 availability. They want high degrees of liquidity. That's what's really exciting for them, plus the additional value generated. And then we have others that want to go further up the risk curve. And with them, it's really always a discussion of what is kind of important and what is the risk tolerance of their platform, of their user base, and what outcomes they're really trying to achieve. Balancing risk, yield, and liquidity, but then working with them to set up systems that really don't put them in a position that is going to be off kilter from the outcome they're going for. So, diversify across a set of options, constantly monitor these options, set ranges that are going to be most appropriate for you and your users, so that you're sitting comfortably in a good zone, and you can comfortably describe the outcome for your user bases. That's really kind of the discussion that we have, kind of almost with every single client, is what is important for their clients or themselves, and what do they need to be affected by using the blockchain. Um,
Yeah.
I think there's like, I want double digits returns, and I want instant
Yeah.
liquidity, and I want I want everything. Um,
But there's
which
trade-offs.
we but there's trade-offs, exactly. So we kind of walk through, well, there's trade-offs. Sometimes that's achievable, but it's generally not achievable in perpetuity. So it's important to really kind of take a portfolio approach when building these products. And
Yeah.
that's generally what we educate our clients about, on what are the risks of these different venues, what are the scenarios to be on the lookout for, and how to build the integration accordingly to reach the outcomes that you're really looking for. So it's really kind of a
Yeah.
conversation and a back and forth.
Yeah. And maybe very quickly, can you talk about where yield is coming from today? Like, what are the sources of yield that you're seeing today and what you're excited about
Yeah.
moving forward?
Yes. Kind of break up that world. It's like there's the crypto native sources of yield, and then there's the tokenized off-chain sources of yield. In the crypto native sources of yield world, there's some very straightforward borrowed lending protocols. There are some liquid staking tokens. And then there's some other interesting structured products that really kind of encapsulate an investment strategy of different kinds that are generally very compelling. But it's important to understand the risks. So we work with our clients to ensure that they understand exactly what is happening with this particular product or this particular protocol. But in the future, I think what's going to be most exciting about the blockchain space is really the kind of movement increasingly toward tokenized real world assets. Those assets that start off chain, get tokenized, have the superpowers of crypto, but have the safeguards of being more traditional, where the assets are stored and how the yield is generated. There still comes with risks. It still comes with different liquidity parameters and thresholds, but they end up being kind of a really exciting way to blend the traditional world with the more crypto native world. And I think that's what's going to be the future of the blockchain space broadly. And that's very much what our client base is very excited about, is being able to blend these worlds to create a yield or a yield bearing product or an earning account
Mm.
that really has both. You can allocate across the spectrum and create a very, very robust offering that has a lot of the safeguards of the off-chain world, but then a lot of the superpowers of the on-chain world as well.
That's really exciting. And it feels like we're getting to a point where embedded yield becomes this really interesting primitive, right? It's like this new financial primitive similar to payments APIs that people can do for the internet. It's programmable. You can just easily link into it. And so maybe a question to kind of end on, what does the future look like? Let's dream a little bit. And what excites you the most about helping build it?
I think the future is really just going to be increasingly more programmable money. Really, just the ability for just about every single asset that someone interacts with can be enhanced in a particular way using the blockchain. So suddenly, instead of having assets kind of locked up in a bank account, under a mattress, in a charge card, or in a brokerage account, there's going to be the ability to really be able to use the blockchain to create to use them in a way that is much, much more dynamic, much faster, and much more exciting. So what this might look like is, there's never going to be a moment in time where someone's, dollar balances or even balances in other currencies are simply just not always earning, and you're not always receiving some of the value from that activity. Similarly, for other assets that are not necessarily currency or fiat, and even converted into stablecoins. But other assets, crypto native or not crypto native, really constantly always being used, and you getting the value of that from for securities lending, from being able to actually do that yourself or to be the beneficiary of that activity from the new type of brokerage that you're using. So I think it's really about that. The fact that money and value and assets are really just constantly being used. It's really who is the benefactor of that. And I think there's a future world to where that's ultimately increasingly going to be the holder, the owner of that asset. And I think that's going to be just very, very exciting to create much more dynamic platforms and products, and really just benefit a much wider audience from that activity than what is done today.
That's incredible. I think that's a good place to end it. Reid, congrats on what you've been able to accomplish so far. And I know we're all super excited to see the ground journey, and we're super fortunate to be partnering with you. And then for folks, if you want to learn more, you can reach out to Reid online. You can go on their website. And thank you for the host for having us.
Thank you.